All right, let's get started. Good evening. How's everybody doing? Hope you're well. This is Tyler Ballhorn, founder of Stock Scores. I'm going to talk tonight about how to become a stock market day trader. The purpose when I was creating the presentation and putting it all together is just to give people a broad overview of the different things you need to think about if you want to become a professional stock trader, whether full-time or part-time. It doesn't even have to be professional. I have many students of mine who trade 1 or 2 days a week and work a normal job otherwise, or are retired, what have you. So let's begin with the itinerary. I'll talk a little bit about what day trading is. I'm going to go through some of the things you need: knowledge, strategies, tools, process, capital. I'll go into the detail of that. Talk a little bit about what you need to bring to the equation, and sort of disclose what is out of your control and some of the factors that you have to deal with when trading the stock market. Talk a little bit about trading as a business, some of the things you need to think about if you do intend to make it a business. And then at the end, I will try to show you how I can help you get to success in trading. All right, so presentation will probably take 45 minutes, maybe a little longer, I don't know. Let's get going. If you have any questions, feel free to type them into the question box. I'll probably answer more of the questions at the end, just to keep the flow going. I am recording the video, so if you miss something or if I go over things too quickly, you will be able to watch the video after the fact and go back over it again. All right, so let's begin with what is day trading. Simply put, it's entering and exiting positions, and I day trade the stock market, so we can say stock positions, within a trading day. So buy it at 10 o'clock, sell it at 11 o'clock. It's closing out those positions before the end of the day. And so ultimately, when I'm day trading, I'm in cash overnight. And as a result, it really mitigates some of the risks that come in the stock market, because most price gaps, in other words, if a stock closes at $100 and then the next day opens at $90, when you're day trading, you don't really have that happen. And so it allows you to better control risk. As a good example, Apple Computer announced earnings after the close yesterday, and it gapped down a few dollars today. Well, I can day trade it, be in cash, and then only trade Apple again the following day, so that sort of thing. My style of day trading is to focus on stocks that are moving. I don't day trade the same stocks every day. Every day I have a new list of stocks that I'm focused on, and my focus is on those that are doing abnormal things. I want to trade the fast-moving stocks, those that give me the best potential for profit in the near term. Most stocks, most of the time, are not worth trading, but just about every stock at some time or another is worth trading. And so I focus on the stocks that are moving. So right now we are in earnings season. That means companies are announcing their financial results for the third quarter. And that drives a lot of abnormal activity. The reason Apple was trading abnormally today, to the downside in this case, was because they announced earnings after the close yesterday. And that made it trade a lot more volume with a lot more volatility. And that is how we make money, off of volume and volatility. I ultimately want to focus on stocks with good liquidity. By that I mean stocks that are actively traded. I like to day trade stocks that trade at least 10,000 times a day. That's not 10,000 shares a day, that's 10,000 times a day. It's 10,000 trades a day. And on Stock Scores, you will notice that we track that statistic, how many times a stock trades in a given day. And I think it's the best indication of liquidity. You can have a stock that trades 1,000,000 shares a day, but if it's a 10-cent stock, that's not all that much volume. 1,000,000 shares of a $100 stock is obviously quite a bit more. And so the best measure of liquidity that I use is the number of trades. And I like to trade stocks that trade at least 10,000 times a day. And with some of my strategies, it's actually 15,000 times a day. Now, my approach to day trading is to do something called strategy trading. I don't trade off of news. I don't trade, pardon my spelling of recommend there. I don't trade off of news. I don't trade off of information. I don't trade of what people are talking about on television or in the newspaper or on Twitter. I trade based on rules, and I have taken my rules and developed them after testing over hundreds, if not thousands of trades, more like thousands, and I've developed a set of rules that I find work over many trades. They may not work on the next trade, they may not have worked on the last trade, they may not have worked on the last 10 trades, but when I do them over and over and over and over again, over 100 trades, they have a positive expected value. So what that means is that if I do the same rules over and over and over again, it should make me money because that's how I've tested them and that's what testing has found. It's much like being a casino in Las Vegas. The casino does not know whether the next hand of blackjack that they deal will win or lose. The casino has no idea. But the casino knows that if they deal 1,000 hands of blackjack, they will make money. And the players overall will lose. Some players may make money, but most will lose, and the casino will win. And that is because the odds favor the house. So I approach the market like the casino. I don't want to be the gambler. I don't want to be the person playing the cards. I want to be the person dealing the cards. I want to trade strategies that have a positive expected value. We'll talk a little bit more about strategy-based trading later tonight. And now an alternative to day trading that requires less time is swing trading. And that's where you're holding stocks for a couple days at least 2 days, but often 3, 4, 5, 6, 7 days. And a lot of people confuse that with day trading. Day trading is closing out your positions before the end of the day. Swing trading is typically holding a stock within maybe 2 weeks. All right, and I teach both. I wouldn't say one is better than the other. It kind of depends on market conditions. And what you do depends largely on your time availability, your personality, your amount of capital you have, what time of the day you can devote to the market, that sort of thing. Day trading at a minimum takes 2 hours in the morning and about a half an hour at the end of the day. And you can easily do it all day, every day. You don't have to do it every day, though. That's one of the nice things about day trading is you can do it on a Tuesday and then Wednesday be in cash and go golf or whatever you're into doing. All right. So let's look at a chart here. This is a stock that I traded this week. I bought it right. My drawing tool is not working again. Let me see if I can do this a different way here. I had this problem the other day. I'm not sure why, but I'll fix it here. Yeah, it's not letting me draw. Okay, well, hopefully you can see what I'm circling with my, I won't have to do this a lot, but so there was a buy signal at the blue line using one of my strategies. The red line was the stop loss point on that particular trade, and it went up through the day for what's called a reward for risk of just a little better than 4 to 1. So what that means is if I risked $100, I made $400 and something, $430. If I risked $1,000, I made $4,300. And we'll talk a little bit more about reward for risk later, but it's an important concept to understand. It really drives toward the ultimate way of measuring success in the market. You should never say, oh, I made 3% or I made $200 on a trade. It's more appropriate to express your profit and loss in terms of the risk you took. So in this particular trade, the risk was 28 cents a share. So if you wanted to risk $280, you bought 1,000 shares. And at the end of the day, that was up 4 times $280. So $1,200 roughly, almost $1,200. So that's how we measure risk. All right. Now, continuing along, what do we need to know? What do you need to be a day trader? Well, the first thing you need is knowledge. You need to learn some core skills for trading the market. And I'm not talking about the strategy yet. I'm just talking about some of the basics. What is the bid? What is the ask? What is the spread between the bid and the ask? How do you place an order? What is a trend line? What is support and resistance and price volatility? What is abnormal activity? What is volume? All of these things are core skills. And some of them you can go get out of a book from the local bookstore for $40 probably. Others are maybe a little more advanced skills that aren't widely written about. Some of the things that I do you won't find in a book because they're my own proprietary things that I've developed. And it's those proprietary elements that give me an edge in the market. You know, if you do what everyone else is doing, you will get what everyone else gets, and that's typically average. If you want to beat the market, you have to have an edge, and your edge starts with knowledge. So some of the core skills that I teach are the basics of the stock market. What is the bid? What is the ask? What is a broker? You know, real simple things. And then how to analyze stocks. What are trend lines and channels and rising bottoms, falling tops, optimism, pessimism. I have something called the 6 elements of chart patterns. It's very important to understand how to manage risk. Where do you take a loss on a trade that you've taken? Where do you sell a winner? How do you size your positions? That's money management. So, you know, if you have $20,000 in your trading account, how much risk should you be taking? And what does that mean in terms of the position size that you take? Strategy development. How do you develop the rules for when to buy, when to sell, or do you even need to do that? Can you rely on someone else's rules for playing the market? And then the actual mechanics of doing a trade. You know, entering the order, how you route the order, what's the right kind of broker, what's the direct difference between a direct access broker and a normal broker, that sort of thing. So these are all some of the base knowledge that you can't make money without, but quite truthfully, by themselves, they won't make you money either. You know, it's sort of like reading a book on how to ride a bicycle. It's great to have that knowledge, but ultimately, until you actually get on the bike and balance and that kind of thing, you're not going to know how to ride a bike. Well, this is the basic skills that you're going to read about before you actually start to trade. Now, on the StockScores website, and I'm going to jump back and forth to the StockScores website throughout the presentation tonight, but on the StockScores website, we have something called the education area. It's right here. And in the education area, we have 4 functional areas: the getting started, the foundation, the investor, and the active trader. Now, the foundation is where you learn the base of knowledge so that you can start to learn strategy. All right, and so you'll see some of the topics here: price channels, the 6 elements of chart patterns, how to scale, what scaling is, how to use stop losses, the different kinds of stop losses. There's all kinds of topics here. And as I said, by themselves, these strategy or this knowledge will not make you money, but you can't make money without knowing these things. So this is your base skills to be able to get to trading. Now, once you have those base skills, then you need strategies. You need to come up with some rules for when to buy, when to sell, managing risk, that sort of thing. It could be when to short, because of course we can make money from markets going down, when to cover those shorts. As I said before, how to size those positions and manage your account, that sort of thing. So all of these things go into strategy trading. Now, what is an example of a strategy? Let's just start with some real simple ideas. There are fundamental strategies. So you could have a strategy that says, I will buy a stock when it has had 4 consecutive quarters of earnings growth and positive cash flow. Okay, that's a fundamental strategy that I'm sure there are people out there that do. It's not something that I do. I don't want you to think it's a good strategy. I have no idea if it's a good strategy or a bad strategy. I'm just saying this is one approach to say, okay, that's a fundamental way of looking at the market. Let's look at the business. Let's look at what they make each quarter. And if they have earnings growth each quarter, in other words, they have some momentum in the growth of their earnings, then you can trade that way. Okay. Now, I'm more of a technical trader, which means I will do things based on statistics of the market. So a real simple strategy, and again, not one that I do, but just a real simple strategy would be to say, if a stock has been below its 50-day moving average for at least 3 weeks, and then crosses above and closes above its 50-day moving average, I will buy it. And I will put a stop loss at the low before it crossed the 50-day moving average. Again, I'm not saying that this is a good strategy. It makes some intuitive sense. It's basically a strategy about momentum changing, but I have no idea if it is good or not. The only way that you know is to test it. And so whether you have a fundamental strategy or a technical strategy, what you ultimately have to do is test it. You have to take the rules that you have developed and test them over a large number of trades over a variety of market conditions. And only then can you determine if the rules have a positive expected value. So if you do something where you test the rules over 100 trades and you find that it, following the rules exactly, made money 68 times out of 100, and the average profit was a reward for risk of 2, and the average loss was a reward for risk of -1, then if you do some simple arithmetic, you can say, okay, well, that strategy makes money. At least it has in the past. And then you can start to put those rules into play going forward and see if you can actually apply them in real conditions without the benefit of hindsight and see if they make money. Okay, so that is the testing process. And whether you develop and test your own strategies or whether you use someone else's strategies that have been tested, it is important that you understand where the rules are based and why they should be done. And I always tell my students who are using my strategies to take the time to do a little testing of my rules themselves so that they have some confidence in those rules and believe in them. Okay? And it really comes down to the power of statistics. When you look at things that happen time after time after time, you start to get a real sense of what works and what doesn't work. And there is a huge amount of information that comes from data. And we are in a data age these days where everything from insurance to how you buy things online to how people drive their cars, with big data, computers can predict what will happen in the future. And they cannot predict what will happen with every single person, but they can predict what will happen over a large number of instances. And that's the power of statistics. And that's how I approach the market. Now, you may have heard that roughly 50% of trading volume on the New York Stock Exchange is driven by computers. And that is because computers are trading the market using strategies. People that take the time to develop strategies and test them have the power of statistics, the evidence that comes from those statistics, and they are using that to develop strategies and have the computers trade the market. Now, you can do the exact same thing. You can think the same way as those huge hedge funds that are, programming computers to trade the market. You just have to do it in a way that fits with your style. And by that I mean you're probably not going to be making trades where you are in and out in a microsecond, which is what high-frequency trading is all about. That can only be done by a computer. But you can think like a computer in saying, if A plus B plus C happens, I will buy. And if D plus E plus F happens, I will sell. And from that, if I tested that over 100 trades, I found that it made money. So therefore, I believe I can do that in the real market. And that's really what strategy trading is all about. Now then you need some tools, all right? And there's a lot of tools out there in the market. I'll touch on a couple tonight. Stock Scores is a tool. I'll show you the market scan in a moment. I use something called TradeStation. Nothing to do with me. It's a software platform developed for traders. Very powerful, something I've been using for, oh gosh, probably 15 years, maybe 13 years. Long time. There is kind of a lower priced version of TradeStation, not quite as full featured as TradeStation, something called TC2000. A lot of people use it. I think a very good platform. Has some limits which I don't like, which is why I don't use it. It doesn't allow me to program my own indicators in the same way that I can do in TradeStation. And it doesn't track number of trades, which is a really important metric for me and that's something I can get from TradeStation. So I prefer TradeStation, but as I said, there's thousands of people using TC2000, and it's probably 1/3 the monthly cost if you have to subscribe to it. And then you have real-time charting programs. There's many different ones. Your broker probably will give you a real-time charting app that you can use to look at charts in real time. So let's just kind of go through these. Let me jump over to stock scores again. Go to my tool here, Market Scan, and I can use this to select different scans. This Market Scan tool has all these different filters which allow me to scan the entire market for a variety of things. So I have a scan built in here called Day Trader. I can select that. Click on this. This is something I can do about 45 minutes after the open to build a watch list for myself to monitor for trades. And so these are all the stocks today that met some of my basic criteria for day trading. I would then monitor this list of stocks for entry signals using my real-time charting program. So I wouldn't have to use TradeStation. I could use stock scores coupled with the real-time charting program. But quite truthfully, because stock scores doesn't update right at the open, like I said, you don't do your first scan until about 45 minutes after the open, and because it's a bit more cumbersome to use the real-time charts that your brokers provide, they're not particularly well designed. They're okay, they're just not great. You're going to miss some trades. You're going to find some trades too, and for many people, especially when you're learning, I think it's a great way to do it. Stock scores is cheap. Real-time charting program, your broker will give it to you for free if you trade, a certain number of times a month. So it's kind of a low-cost entry. TradeStation takes it to another level. So I'll jump over to TradeStation here. So this is TradeStation. It's very flexible. You can move things around. You can design it however you want. It comes like a blank canvas, and then you create studies. So on the screen that you're seeing right now, which is kind of a mini version of what I normally look at, it has 3 different charts. It has things called radar screens, hot lists, a scanning tool, a level 2 screen. And again, this is kind of a compressed version of what I normally look at because I'm doing this presentation right now off of my laptop, which has got a smaller screen than I normally trade from. But it gives you an idea of what I'm doing. And so I have a process that I use. I'll run a scan. I'll drop it into this is called a radar screen. I'll then take some of those symbols out and drop them into another radar screen where it calculates for one of my indicators. And from that, I've created a watch list. It's the same process that I would do on stock scores, which is very fast. On stock scores, it takes a blink of an eye, but it's not quite as timely as the process that I can do with TradeStation. And then I monitor the stocks in TradeStation looking for certain indicators. So I'll blow this chart up here. You'll see on this chart, and it's maybe a little hard to see, let me zoom in on this a little bit. You can see on this chart there's pink dots, there's white dots, there's blue dots, some little red crosses, and certain indicators on this chart. You can see there's an indicator down at the bottom. Now, all of the dots, the pink, white, blue dots, there's a yellow dot there, those are all my own indicators. They don't come with TradeStation. You can only get them if you are my student. And it's something that I have written the algorithm. It's what gives me an edge. And I then make that available to my students, and I use it every day myself. As an example, on Boeing, there was a blue dot and a white dot here. That's a little combination we look for. And that was a good buy point on Boeing. And it went up a little bit from there, finished the day at about a 2.5 to 1 reward for risk ratio. Now, if we wanted to swing trade, remember I talked earlier that you don't have to day trade, you can swing trade as well. Well, then we rely more on the pink dot. All right, so this is a pink dot that happened 3 days ago on Monday, and it met all my criteria. There's a pattern here on this chart called a cup and handle pattern. That particular pattern is taught in one of those modules in the foundation material on the Stock Scores Education Center. So I know that that little pink dot, when it comes out of a pattern like that, has a good potential to go higher. At the time, Boeing was at $138. Today it closed at $145.50. So it's made a decent move on a reward for risk basis. It's now up about 4 to 1 reward for risk. That means if you took $1,000 of risk on this particular trade, you're currently sitting with a $4,000 profit, and that's in 3 days. Pretty capital intensive on this particular stock because Boeing is a $140 stock. But you can apply these indicators to $2 stocks just as well. All right, there's no, sorry, it looks like my internet connection just dropped, so I'll just pause and make sure I'm not missing you guys here. I think I'm still coming through okay. All right, so there's no, what was I saying? Whether you want to day trade or swing trade, up to you, but these indicators are helpful. And the process that you use is very helpful at finding stocks in a timely way. One of the real critical things about trading is finding things on time. You know, if you think about this chart right here, this is a 2-minute chart. Okay, this is what happened with Boeing today through the whole day. So this is 9:30 in the morning over on the left, Eastern time. This is the close, 4 o'clock. Each one of these candles on here represents 2 minutes of trading. And in some cases, if you find the opportunity 10 minutes after me, you might be paying significantly more than I did. And that's where these tools come into effect. The quality of the tools and the quality of the process is what allows you to find things in a timely way. And that's why tools are so important. Now then we have order entry tools. So your broker will give you some kind of a platform to buy and sell. And depending on the broker that you have, those tools can be very different. If you are in the US, you can open a brokerage account with TradeStation. They will give you their platform for free and you can trade right on the platform. I'm a Canadian. I cannot open an account with TradeStation because Canadians cannot open accounts with US brokers. And so I have to do my analysis through TradeStation and then my order entry through my broker in Canada. And that means I've got 2 programs running on my computer at once to do it, and I'm flipping back and forth to do that. It's a little more cumbersome, but that's one of the weaknesses of being in Canada. We don't have the same quality of analytical platforms as are available in the US. And so I have to subscribe to TradeStation. It costs me a few $100s a month, and then I can do my trades through my broker and that sort of thing. Other tools that are helpful is some of the tools for post-trade analytics. Every trade that you do teaches you a lesson. And so you may as well track every trade and make comments and make notes and track the statistics of every trade, because when you start doing hundreds of trades, you'll see patterns. You will see perhaps that you end up taking losses that are too large, and so you're not controlling your risk very well. You might find when you look at hundreds of trades that you've done that you tend to exit too early, and so you're not maximizing the reward of your trades. I think it's also helpful to grab a chart image of the trades that you take and put them in a Word document, or you know, some other, print them out perhaps and mark it up, put it in a binder. I mean, there's no right way to do post-trade analytics, but it's an important thing to do. I like to every day track all of the stocks that met my criteria, and I put them in an Excel spreadsheet, and so I can go back over them and look for patterns, look for things that maybe I can use to improve my rules. And I do that every day. It takes me about 20 minutes every day, maybe 15 minutes. But it's so insightful to get that data, and there's just power in data. So those are some of the tools. You have the market scanning tools, you have the order entry tools, and then you have the analytical tools, Excel and Word, right? Now the next thing that you need is process. You need a step-by-step plan for implementing the trading strategy. You know, it doesn't matter if you have great rules if you can't do them fast enough or in the right manner. You know, finding a trade after it's already done its thing doesn't help you at all, right? And so we need a step-by-step process in a trading plan for applying your rules. It should be mechanical. It should be efficient. In some cases, it has to be done very quickly. In some cases, you can do it much more slowly. When I am swing trading, the time sensitivity is much less than when I am day trading. When I'm day trading, I got to have a process that's updating every 2 minutes. And so I got to be fast. I got to be efficient. I have to have a very good process. And it takes practice. Not because it's difficult, but because you have to do it to the point that you're not thinking anymore. You know, it's if you're a professional athlete, let's say you're a hockey player, when you're on the ice playing hockey, you are not thinking. You are doing things impulsively, instinctively, because if you slow down enough to think about, okay, I'm gonna take the puck and I'm gonna pass it to the guy that's over there because he's wide open. In that delay that it takes to think, you've missed the play. And that's kind of the case with day trading, some of the time anyway. You need to be able to think quickly and, or maybe not even think, just do things instinctively, and that takes practice. And when my students first start out, they're cumbersome, they're slow, but with each day that they do it, they get faster and they get faster until they get to a point where they're not thinking anymore. They're doing things because they've built a mechanical process. And by making that process mechanical, by having it very logic-based, not leaving a lot of room for human judgment because you are a strategy trader, not an emotional basket case trader, you can remove the emotion. And that is such an essential element of trading. Emotion is the killer for traders. Emotion makes you take trades that don't qualify because of a fear of missing out. Emotion will cause you to sell your winners too early because of a fear of your winner turning into a loser. Emotion will make you not take a loss because you hate the pain or you can't stand the pain of losing on a trade. And all of these emotional elements, all of these things that make you human are hurting you in the market. And the reason these big funds have spent millions and millions of dollars developing computer-based strategies and computerizing them is because they've recognized that humans are the weak link in trading. And that doesn't mean that you can't do it without computerizing it. But what I've done is I've tried to make probably 80% of my process computerized, and I'm getting even more and more computerized as time passes. Now, I still enter the trade manually. I still have some judgment in whether I'm going to take a trade or not. I can't do it entirely by indicators, although it's almost all by indicators now. I'm trying to take out as much human element as possible. So by removing emotion in the process, I'm going to be a better trader. And that's part of developing a good trading plan based on good strategy. All right, so another thing you need obviously is capital. You can't trade the market without money. How much capital you have does not determine how much you should start trading with. You know, if you came to me and said, okay, I'm retired, I love the market, I haven't traded much, but I want to learn, I've got $1 million that I want to trade with. I would tell you to trade with $0 of capital to begin with. Don't touch your $1 million because our number one goal in trading is capital preservation. Number one goal, capital preservation. All right, and to preserve capital, what you have to do is minimize your risk. So what I tell people to do is start with $0 of risk. Simply practice in a simulator or in Microsoft Excel by putting your trades, where you bought it, where you sold it, where your stop loss point was, that sort of thing, putting all of that in an Excel spreadsheet and just practice for a while. I've created a simulator which is free to use at tradescores.com. You see the address there. And you can go in there, set up a free account, and buy and sell in pretend for practice. Now, you don't buy a certain dollar amount of a stock. Basically, you enter in the price you're buying it for. Actually, the system puts that in based on where the stock is at the time you buy it. And you put in where your stop loss point is, and it calculates the reward for risk that you earn on the trade, as well as the percentage return. It's a unique way of simulating because it's focused on that really important metric that I talked about earlier, which is reward for risk. Okay, so let's talk about this general rule of capital. Now, remember earlier I said that we look at our performance in the market in terms of reward for risk. So if I risk $100 and I make $200, I have earned a reward for risk of 2. Okay, make 100 or risk 100 to make 200 gives me a reward for risk of 2. Well, that risk of $100 is called our risk tolerance. All right, now when you start out, your risk tolerance should be 0. You're not going to risk any money. As you gain some success paper trading or simulated trading, maybe you increase your risk to $100. All right, the general rule, and this is a very general rule, but basically if you want to know how much money you need to trade, take your risk tolerance and multiply it by 100. So if your risk tolerance is $100, multiply that by 100, you should be able to do that with $10,000. Okay, if your risk tolerance is $50, you need $5,000. If your risk tolerance is $1,000, you need $100,000 of capital. Again, I want to stress, however, that if you have $10,000, you should not be starting with a risk of $100. You should be starting with a risk of $0. Practice, make money in a simulated environment, and then start with a small amount of risk. Maybe start by risking $50 a trade, and then increase it to 75, and then to 100, and so on and so forth. Now, that risk tolerance times 100 as a general rule is very dependent upon what's happening in the market. Right now, we're in earnings season, and many of the trading opportunities that are coming up are in more expensive stocks that are capturing the market's interest because they're announcing earnings. So, for example, Boeing, $140 stock. You're going to have to tie up a lot more capital trading Boeing than you would trading a $3 NASDAQ biotech stock. Okay, in fact, you would probably need $30,000 to trade Boeing with the same amount of risk that would only require $3,000 to trade some $3 biotech stock. So as a general rule, the lower price a stock is, the less capital they need to take on the same amount of risk because they're more volatile. They move in bigger jumps in a percentage term, and so they take less capital. Now, in the last couple of weeks, there's been very few low-price stocks moving. It's just the way it is. Sometimes the market gives you all kinds of opportunity in low-price stocks and not a lot in the high-price stocks. And it goes in waves. So right now we're in a wave where most of the opportunities are in higher-priced stocks with not a lot of follow-through. And that's been that way for the last few weeks. Earlier in September, we had much more movers in the lower price stocks, and they were making big moves. And why it fluctuates like that, hard to say. You know, right now the market's thinking about an election in 13 days. It's thinking about the possibility of a Fed interest rate raise. We're in earnings season, as I said before, so those are factors that determine how people approach the market. Typically from November until May, we are in stock market season, if you will, and you'll tend to get more action in lower price stocks at that time of year. Right now, October is a time of year when people are a little bit concerned about a correction and that sort of thing. So people are less willing to take risk right now, but that should start to change in the next few weeks. Typically, it's November till May. It fluctuates a little bit every year, but that's typical. All right, so as you are successful, you increase your risk. If you're not doing well in the simulated environment, then you keep practicing. And don't start trading with real money if you're not making money in a simulated environment. And if you start trading with real money and then you find you're losing, then scale back to $0 of risk again. We want to always maintain our number one goal, which is capital preservation. All right, so those are some of the things that you need. What you also need to bring, which is maybe not so much theory-based, but you need to bring a few characteristics. I always like to say that trading is simple, but it is not easy. If you are a normal human being, you are predisposed to fail in the stock market. And so you have to overcome being human. And I really encourage people to walk before they run. Don't jump into the market with guns a-blazing, putting all of your savings into some day trades without learning how to do it. You know, I think when people watch me trade, and I have a service where my students can watch me trade, and I think when they see that, they realize that there's a real process there. But I think they also realize that it's pretty simple. I mean, there's lots of nuances to it, and the things I think about in terms of, where I think a stock will get stuck, where I think a stock is a high probability trade, where I think a stock is a high reward for risk potential trade, these kind of factors. Those are simple things. They're not intellectually difficult. But getting there is not easy. It takes practice. It takes focus. It takes determination to learn it. And it takes discipline. You cannot approach the market as a gambler. You have to approach the market as a rules-based strategy trader. If you go into the market sort of winging it, you might get lucky. You might catch a hot trend in the market where it's easy to make money. If gold stocks are hot, and some time ago they were really moving, and you could buy basically any gold stock on a tip, on something you heard in the news, and make money. And you walked around thinking, wow, trading's easy. I didn't take any courses. I didn't learn anything about it. I just listened to what that guy on TV said, and I made a whack of money, and I must be a great trader. The problem is when that trend is over and the market is not helping you, then you'll probably give back all of those profits. There's a saying in the market that for gamblers, profits are nothing more than short-term loans. And you really need to take that to heart. I've been trading for 26 years. There's not many people who can stay around for that long. And a big reason for that is I'm very focused on capital preservation. I have a lot of discipline, and I've practiced a lot. I'm not a rocket scientist. I'm not, exceptionally hardworking, to be honest. I work hard in developing my strategies, but once I've developed a strategy, it doesn't take me a lot of time. Most of my entries, my trade entries, are in the first 2 hours of the day, and the rest of the day I don't really watch the market that closely, and then I check them at the end of the day for my exit signals. So you don't have to work hard when you're actually trading, but you do have to work hard when you're learning to trade. You have to be very determined and disciplined and focus and practice. And if you don't have those things, if you don't like the market, then I don't recommend you try day trading. Because if you don't like trading, then you won't put in the effort to get there. Don't waste your money going into the market because you met a guy who drives a Ferrari and he says he's a day trader. You got to do it for the right reasons. Now, some things that are out of your control. And this is the reality of trading. There's a certain element of trading that is completely out of your control. And if you try to control it, you will get burned. You have no control over market conditions. Trading does not deliver the same results day by day. Sorry, I said day by day there. That's supposed to be day by day. What I mean by that is I can trade one day and make a reward for risk of 10. So if I'm risking $1,000, I can make $10,000 in a day. And then I can go 4 days breaking even, or maybe even losing money, a little bit of money on some of those days. And then have another good day where I make $8,000. And then have a couple days where I break even and then lose $2,000. And then have a really good day where I make $20,000 because the market conditions were good. Trading is very streaky. All right. Through the month of October, the market has not been great for trading. It hasn't had great follow through. It's been very whippy. By whippy, I mean it goes up for a day, goes down for a day, goes up for a day, goes down for a day. There's no trend. There's no action. And if you go look at a chart, in fact, I'll show you this because it's very telling. Let me show you a chart of the S&P 500 over the last month. And I'm going to make this a 1 month chart, 60-minute chart. So see what I mean? So each one of these grids here is a day of trading, okay? So it went down one day, the next day it went right back up again. Then it went down, and then it went up again. And went down, went up again, went up, down, then up for 1 day, and then down for 2 days. And then up for 2 days, down for 1 day, up for 1 day, down for 2 days. You get the idea? There's been no trend over the last month. Now, if I take this back a little farther, and I've got a tool on here that I can do that, let's go back to, say, July 15th. Just so you can see the difference. Do this again. And again, I'm going to make this a 1 month, 60-minute chart. Look at the difference now. Here it went up for 6 days, down for maybe 5, up for 1, down for 1, and then up for 5, and then sharply down for 2, and then up for probably 20 days in a row with a little pause along the way. So that's a trending market. That's a lot easier to trade. And that, what you see here on screen, is a normal market. What we have had in the month of October is far from normal. Very, very abnormal, the condition that we have right now. And again, it's October, so there's a seasonality factor. People are worried about a correction. There is third quarter earnings, which tend to be the worst quarter of the year, which is one of the reasons you often get corrections in September and October. There is the election, which has been a total circus, and people are glued to their TVs because it's entertainment, and they're maybe not so focused on trading. Then you have discussion from the U.S. Fed. Maybe we'll raise interest rates. Maybe it'll be November, December. So that's got people sitting on their hands. So all of these factors have made it a slow time. It always changes. I have seen slow periods in the market constantly for the last 25 years. And they come and they go. And it's part of the streakiness of the market. So I've got there talking about the 80-20 rule. 80% of your profits probably happen 20% of the time. Because you get these days or these weeks where the market is trending and really doing well, and you can make a lot of money in a short amount of time. And then you'll go quiet for a while, and you're just kind of surviving. You know, breaking even, maybe make a little, maybe lose a little. You're grinding it out, surviving, waiting for the next move. And then another week later, bang, you get 3 big days where the market is really delivering. And it could be 3 down days. You can make money from a down market. In fact, I love corrections because they're really easy to make money during them. When you get this sharp emotional sell-off, there's inverse ETFs and the VIX and these kind of things that move really sharply. They'll move 50% in 2 or 3 days. And so corrections you can make money from. But what you need is a trend. What we've had in October is pure chop. Up, down, up, down, up, down, up, down. Very frustrating. But I do it every day. I keep trading every day because all of a sudden it'll start trending. And if you're asleep, if you're not watching the market, you miss that great move. Okay? So that's out of your control. And I tell people at the outset, I don't want to give you these grand illusions about trading. You cannot make money consistently every day. It's unreasonable to expect it. And it's because of market conditions. And what's key is that when the market's not great, to have good discipline and good risk management so you don't give back the profits that you make when the market is really strong. All right, let's talk a little bit about trading as a business, the economics of trading. So I always tell my students that in a normal market with good discipline, good strategy, you should be able to make 10 RR a week. Okay, so that means if you're risking $100, you should be able to make $1,000 a week. If you're risking $1,000, make $10,000 a week, that sort of thing. That assumes that you're disciplined, that you're focused, that you follow the rules, that your strategy is good, that sort of thing. I've had single trades where I've made 10 RR. I have many days when I make 10 or more RR. Haven't had any this week. Last week I had a few days like that. And that's my goal, to make 10. Some weeks I make 40. Some weeks I lose 10. This week I'll probably lose maybe 5 so far anyway. So it's been a grinding of a week. But my goal is to make 10. So that's your economics. Now if you think about that, to make 10 RR, and if your risk is $100, you need $10,000 to do that. And making 10 RR would be making $1,000 a week, $4,000 a month using $10,000. A lot of people would say 40% a month, that's unreasonable. But keep in mind that the thing that you're doing with trading is you're putting a lot of time into it and taking advantage of volatility. It's not passive investing. This is active trading. Now, 10 RR has a limit in terms of capital. Okay, you can do that with $1 million. When you get up into $10 million and you're day trading, it becomes difficult to place the money, just simply day trading. As you get more capital, you have to take longer term trades. And I would say once you get above $1 million of capital, you have to start taking some longer term trades. And even $1 million can be, in a quiet market can be hard to day trade because there's just not enough action, sometimes anyway. So the more capital you have, the longer your time frame for trading. You have to start swing trading, and then if you have $10 million or more, then you have to start position trading because you just can't make all the money work. I tend to sit in a lot of cash because I don't have the patience for position trading. I like to day trade, and I'll wait for when the market's hot, and I'll take big positions when the market's hot. Right now, the last couple of weeks, the market's been not hot, so I'm trading with very low risk, and I'm sitting on a bunch of cash. It's not working. But that's okay. I'm happy to sit on cash and be safe, and if the market corrects, I'm cash strong so that I can be there when the bounce comes. Let's talk a little bit about tax status. If you make a few trades here and there, it's not your primary occupation, you go to a job every day, that sort of thing, you are not, in the eyes of a tax professional, you are not a professional trader. Now I'm going to give you some basic knowledge based on what I know from Canada. I know we have people in the webinar tonight from other parts of the world, and so I strongly recommend that you look into the different tax situations where you live. I'll give you the idea for Canada, and you can sort of sense some of the questions you need to ask. So in Canada, if trading is your primary occupation, it's what you spend your time doing, it's your area of expertise, you don't go to a job every day, it's your focus, it's your number one occupation, then the taxman will declare you a professional trader. What that means is that you lose the capital gains exemption. So in Canada, if you make $100,000 in the market investing, let's say you've got a retirement portfolio, and 1 year you make $100,000, you're going to pay tax on half of the normal tax rate. So if your normal tax rate is 50%, you're going to pay a 25% tax on that because you get what's called the capital gains exemption. It's great. It means that your savings are taxed much less than the income from your job, right? However, Revenue Canada, the tax man here, says if trading is your primary occupation, you don't get to use the capital gains exemption. You are a professional trader. And at that point, it makes sense to set yourself up as a corporation because the corporate tax rate is less than your personal tax rate. Now, of course, we also have things in Canada like the TFSA, RRSP. You can trade in those. The taxman isn't too enthusiastic about you day trading inside those accounts because, again, it's not meant to be a business account. It's meant to be a place where you save money. In the U.S., you have the 401k and the IRA, and I'm not too familiar with them, but you've got different tax plans there as well. You have to look into the tax implications of actively trading in those accounts. In some cases, you can't do that. So you want to set yourself up as a corporation because the small business tax rate, I think, starts at around 16% on the first, I think it's $400,000, $450,000. And then you can dividend yourself out some income. Dividend tax rate is less. So there's some tax things you can do to be efficient to lower your overall tax bill if you are a pro trader. Now, if you're making a couple trades here and there, you go to your job every day, you don't have to worry about that too much. You're not going to be declared a pro trader. But I always suggest to people get tax advice if you want to make a business out of trading because you can really screw yourself if you make a bunch of money trading and you don't plan for it and then you get a big tax bill. That happened to me one of my early years of trading. I made a ton of money, did it all personally, got declared a pro trader by the tax man and paid the full enchilada on the tax rate when I could have saved a lot of taxes. So some things to think about. On the expense side, some of the things is business. You're going to pay commissions in and out. Commissions shouldn't be more than $10 a trade in, $10 out. You can get even less, but that's, to me, kind of the benchmark. You have costs for your platforms. I like to use TradeStation. TradeStation, my students will pay about about $200, maybe $220 US. By the time you pay it in Canadian dollars, maybe 300 Canadian. It's a cost of doing business. If you're not going to trade a lot, then you shouldn't maybe incur that cost because you can't justify it. If you're going to trade every day or even 2 or 3 days a week, TradeStation pays for itself because it will help you find opportunities that you would otherwise miss. You got an internet connection, call that. I like to have a good, reliable internet connection, so that's maybe $50 to $100 a month. Hardware, you need a computer, you need a fast computer. I recommend a Windows-based computer. You can use Macs, but you have to run Windows on it. And so there's software called Parallels, which allows you to run Windows on a Mac. There's also something on the Mac called Boot Camp, which you can use as well. But you need to run Windows because all of these software programs, again, for day trading I'm speaking, run on Windows. They don't run on the Mac operating system. If you're just using my Stock Scores website, for example, then you don't need Windows because that runs on a browser. But a lot of the trading platforms that the brokerages have don't work on a Mac, so you need Windows. If you're going to day trade, particularly if you're going to use TradeStation, I recommend a computer that has flash memory instead of a hard drive. So solid state memory is another name for it. Hard drives are slow, and you've got all that data coming in, doing calculations on it. There's a noticeable improvement in running TradeStation on a computer with flash memory. Is it essential? No, it's not, but it will make your computer run quicker, and sometimes a couple seconds here or there can make the difference in getting into a trade at the right time. Education. You can go out and learn how to trade on your own. It'll take you years. It will cost you thousands and thousands of dollars in mistakes, or you can buy education from someone like me, and hopefully I can minimize your mistakes and speed up your learning process. But there's a cost to that. And that takes me to my next slide, how to become a day trader. There's two ways. You can do it yourself, develop and test your own strategies. It took me 8 years and a lot of expensive lessons before I was successful. Or you can buy education from someone who's experienced. I've traded for 25 years, 20 more than that now, 26, 27 years. I have taught people since 2000, so 16 years. And I've got a lot of experience in trading, but also in training people how to trade. And I can shorten your learning curve, and I can help you avoid mistakes. If you listen to me, I guarantee you will learn quicker and you will make fewer mistakes. Now, if you don't listen to me, well, that's your problem, but trust that I know what I'm talking about. I've done this a long time. I do it every day. I can think of very few days in the last 20 years when I have not looked at the stock market. It drives my wife crazy. I'll go on a cruise. I'm still checking the market. I'm sometimes in a place where there's no internet connection, and I'll find an internet cafe to take a look at the market. I've been writing about the market for over 20 years. So there's a ton of experience there, and I think that I can help people learn. How do I do that? Through the Stock Scores Education Center. So that's something that I showed you earlier. We have 3 important areas. The foundation area is where you get that base knowledge that we talked about at the top. Each module in the Education Center, and we'll jump there now, has a written lesson. Click on that. There's a written lesson. It has a video. You can watch the video. Whoops. Okay, so I can click on this and the video will start. You can watch that video on an iPad, on a phone, wherever you have an internet connection. And then you have an assignment, and then you have a multiple choice test. And you go through it one module at a time. There's probably 10 to 15 hours of work here. So it's like a weekend class. When I used to teach this as a weekend class in a university classroom, and we'd go through it section by section. The weakness of that was people forgot a lot of it because it wasn't a video. When it's a video, you can go back and watch it 100 times if you want. You can read the lesson as many times as you want. When I do it in the classroom, it's nice because you can put up your hand and ask a question. When you do it this way, you are emailing me with your questions. But again, it's not rocket science. It's not intellectually difficult. It's something where I've broken down complex ideas into little pieces that are simple. Each idea is simple. They build on each other. So you understand some simple ideas, then you move on to the combination of those ideas to understand something a little bit more complex. So for example, a chart pattern is easily understood if you break it down into the components of a chart pattern. Well, the components of the chart pattern are the elements of chart patterns. That's the lesson. And then you move to the next lesson, which is predictive chart patterns. If I jumped right to predictive chart patterns, it'd be hard to understand. But because we break it down into pieces first, that's easier to understand. And then price channels becomes easier to understand because you've learned about optimism and pessimism and support and resistance in this lesson. So it all builds on each other. You don't have to know anything going in. I assume that you know nothing about trading, and I start from the basics and work up in complexity as you go through. Okay, then we have, so that's the base knowledge, and then you have the actual strategy. So if you want to learn how to invest your money, managing your retirement portfolio, that sort of thing, that's the investor material. If you want to learn how to day and swing trade, that is the active trader material. So you've got the active trader exit strategies, and then you've got some day trading strategies and some swing trading strategies. There's not many of them. It's simple. It's complex. I could probably make 10 more strategies, but why make it complicated? I have these things. I've been doing them for a long time. I'm always trying to improve them. And one of the ways that you learn about the improvements is through the live training that I do from time to time. So I'm just going to jump ahead to that here. So I'm going to be doing some live training in November, and this is how you get a couple things. One, you have me walk you through the process. So on Saturday, November 12th from 9 Pacific time until noon Pacific time, so 12 till 3 Eastern time, we're going to do a foundation review. We're going to go through all of the concepts from the foundation area. Okay, all of these concepts, I'm going to go through those with you as a 3-hour class. You can ask questions. It's done just like this webinar. You post your questions, I answer them as I go through it. We just break it down into pieces. It overcomes your procrastination, because instead of having to, motivate yourself to watch all the videos, I'm going to go through them as a good overview. It's a good idea to do as much of it as you can beforehand. It's a good idea to review it after, but at least we're going to get a little bit of that procrastination out of the way on Saturday. Then Monday, the week of the November 21st until the 24th, and I actually have to change that because I forgot that the 24th is Thanksgiving in the United States, and the markets won't be open. So Monday, November 21st, Tuesday, Wednesday, and then we'll do the following Monday for our live sessions. So in the evenings, I'm going to do market scanning and evaluating opportunities for those who take the investor course. For those who take the active trader course, you're going to watch me trade. I'm going to teach you the processes in real market conditions, step by step, for the first 2 hours of the trading day. So we'll walk through each process, we'll evaluate trades, and I'll actually trade them. As part of the active trader course, I'm actually going to trade live for the whole month, but I'm going to focus on the education for those 4 days. So Monday, Tuesday, Wednesday, and the following Monday. So I say there Thursday, it's going to be the following Monday because it's Thanksgiving. And it's a great way to kind of get the latest and greatest little tweaks I've made to the strategies. There's not a lot, but there's a few little things I've changed or improved upon. It's kind of like, I have an iPhone 6. Maybe I should go buy the iPhone 7. It's a little better. It's a little faster. It's got a better camera. Well, the course material is great, just like my iPhone 6 is great, but there's some little tweaks that I'm going to share with you during these live sessions in November. All right. So what do you get with the investor course? You get access to the foundation material. You get access to the investor strategies, to the investor market scans on stock scores. You get email support from me, and you get 6 months access to our tools. You can then renew your access to those tools for $300 a year. Now, the active trader course is all of that. You get the foundation, you get the investor, but you also get access to the active trader strategies, to the active trader market scans, email support from me, same access to the tools. And then the final thing, which is really important, is the proprietary indicators that I have created for TradeStation. So that's your yellow dots, your white dots. There's other indicators I've made. There's probably, a dozen indicators that I've had programmed. Cost me thousands of dollars to have those programmed for TradeStation. You can only get them if you take my active trader course. I've had many people, but just the other day I had someone email me saying, can I just buy the indicators? No, you cannot. You have to take the course. And the reason is I don't want to have thousands of people using these things. Like, there are not that many people using my indicators because I don't teach a lot of people. I only teach this course personally a couple times a year to a relatively small number of people. And that's the way I like it. It generates some cash flow for me, pays some things so I don't have to take money out of the market. I don't want to take money out of my trading account. So it generates cash flow. I teach people to do something that they want to do, help them along the way with my experience, and I think everyone's happy. So it's a good thing. But again, I don't want to teach thousands of people because I do this every day. And if I have thousands of people doing what I do, it's not going to work anymore. So it's a relatively small number of people. All right, so what's the special offer? So if you register for either the investor or active trader course before 11 p.m. Pacific time on Tuesday, November 8th, you will get that complimentary live trading, which is the Saturday session for 3 hours, the evening sessions for the investor course, and the live trading for the active trader course through all of November, but the education week, third week of November, you'll get that for free. It's included. If you wait until after November 8th, it's $495 extra. So that's your incentive to not procrastinate. It helps me because people sign up last minute. It's a pain because I run around with my head cut off, an hour before I'm doing my foundation course to try to get everyone else booked in. I don't like to do it. So I like to give people this incentive. It's free if you do it before November 8th. Cost. Investor course, $2,495. That's Canadian dollars. If you're a Canadian, you're going to pay GST as well. If you're an American, there's no tax, and you're also paying in Canadian dollars, so it's less. I think the Canadian dollar is about 30% less than the US right now. Active Trader, $3,495 Canadian plus GST for Canadian residents. If you wanted to buy the investor course and then upgrade to the Active Trader course later, you pay the price difference plus $250. So, there's a little bit of an incentive to do it all from the beginning because otherwise you pay an extra $250. All right, so I'm going to just launch a poll here quickly. If you have an interest in getting an email with the registration instructions for the class, I will send that out probably next week. So I'll launch this here. Just say yes. If you don't want it, say no. You can be specific to the course that you're interested in, the Active Trader or the Investor course. I'm not going to send you a bunch of email. I don't do sales pitches or be pushy. It's not my style. My courses, enough people take them that it's worth my time. But again, I actually don't want to have a whole bunch of students. So don't expect me to be bugging you endlessly. I don't spam people. You'll get 1 or 2 emails from me saying, here's the details of the course. Here's what you get. Here's the link to sign up. All right, so I'll leave that poll up for another minute or so. Excuse me. There is a page where you can go register right away if you don't want to wait for the email. Just go to, I'll show you in a second. I'll leave the poll up just for a second here. So of course, tonight's presentation was focused on day trading. So that course, if you want to learn how to day trade, that's the Active Trader course. And you get the investor course with it. You get everything, okay? If you take the investor course, you don't get the Active Trader course, but if you take the Active Trader, you get everything. If you take the investor, you get the investor course and the foundation material. Take Active Trader, you get everything else. All right, so I will shut down this poll here. So you got about 10 seconds to answer. And that basically puts you on my email list. I'll send you an email next week with some details. I'm going to take this down now. And then I'll answer some questions. And then we'll finish. What time is it? Oh my, we've gone long tonight. So much for 45 minutes, eh? All right, so I'm going to close that. And I said earlier that if you just want to go register for the course, you can do that right now. Go to the address you see on screen, stockscores.com/learn. There's a couple of videos on there that give you more information on the investor course and the Active Trader course. And more information on what you get with each course, that kind of thing. So I'll just leave that up for a second while I just go through some of these questions here. Can I purchase the Active Trader course on StockScores? Yep, that's what I'm just saying here. Just go to that address. The other thing you can do, and I'll just show you on StockScores, if you go to the StockScores homepage, so if I just click on home here, right here in the middle it says Learn to Trade with the StockScores approach. Okay, click on that. And that takes you to stockscores.com/learn. And there is me in a crazy suit and some videos on the different courses, and you can sign up right there. Okay, and again, I talk about the live training. It's not there, but the live training is included if you sign up before November 8th, and you'll get it that way. I have already taken the investor course. What is the cost to do it again? If you want to do the live training again in in November, let's say you've taken the investor course already, it'll be $195. And I will email out a link to that hopefully next week. A couple more questions here. I'm just sort of trying to read through it. So what is the Active Trader course on your website? Isn't it cheaper? No, same price, $34.95 for Active Trader, $24.95 for Investor. Now, if you've taken one of my other courses already, then you're just paying to upgrade. So if you did the foundation in the past, then you just upgrade. And that's all on the Learn page. It'll actually, once you're logged in, it'll show you what your upgrade fees are if you've taken something already. Do I watch the level 2 screen to time your entries? Not really. I trade very liquid stocks. Level 2 used to be useful maybe 7-8 years ago, and that's used to be how people traded, was off of level 2. It was something called the SOS system, where you looked at the single order execution system, how people stacked up their orders with the market makers, that kind of thing. Nowadays computers do that, and the market makers are out of it, at least in a conventional way. So it just doesn't work that way. If you upgrade from the Investor to the Active Trader, you will get the live training in November, yes. If you bought Active Trader, do you send a link for when you do it live? Yes. So Mark, I know that you just bought the Active Trader course last week. You will be getting a link for the live training in November next week. My abnormal activity service on your website. I have a live trading room, which is what I'm doing in November. And if you've already taken my Active Trader course, you can subscribe to that live trading service for $195 a month. But you can't do that unless you've taken the unless you've taken the Active Trader course. Good question. How long do I have access to the course materials for? There's no time limit. If you bought my course 3 years ago, you can still access the videos. You can watch them 500 times if you want. There's no limit. Stock Scores has been around since 1999, so it's not like we're a fly-by-night operation. I have no intention of quitting anytime soon, but you know, if the internet breaks or something, maybe that would be your limiting factor. But as far as I plan, there's no limit to how long you can access material. And I've got students from 15 years ago who are still looking at my videos today, and there's updates and that kind of thing that get loaded. So, all right, I think that's the end of the questions, and I've gone way over time, so I'm going to end the presentation now. Thank you all for joining me. I hope you have a great evening. I did record this, so I will be sending out a link to the recording so you can go through things that maybe you missed. I hope I've given you a good overview of trading. And hopefully some of you who want to take it to the next level will consider the upcoming live training with the Active Trader course or the Investor course. If you have any questions, you can email me. I'm just going to put up my email address real quick here. There's my email address, tylerb@stockscores.com. I welcome your questions. Follow me on Twitter, my Twitter handle @stockscores. I post a few things a week, different thoughts about the market, that kind of thing. Also have a YouTube channel. There's the address for the YouTube channel. Subscribe to the YouTube channel. The more people that subscribe, the more I want to put on videos. So I put lots of free content on YouTube and on Twitter, so follow me on those things. It's free. All right, thanks everyone. Have a great night.